In this video, I'm going to go over the Fibonacci indicator, and I'll explain to you how I use it, even though it's actually not incorporated into the systemation key. It is something that I use when I'm manually trading, and I will also give you some advanced techniques that I use if I'm swing trading and I believe that's a very strong momentum trade. I may very well, after some of the TPs have been hit, re-enter the trades manually. Now, this is not something that I recommend doing unless you're an advanced trader, or more specifically, you've been trading this specific system strategy that you've got for that trading pair for quite a while. I started doing it after 3 months and found some success, but I did create this personal strategy from scratch, and I did a lot of manual back testing in the process of doing it. And manual back testing is probably extremely underrated. I can show you my old back test charts, but it basically would take me, we're talking like 12 hours to get 100 back tests on a trading strategy. And then I'd make a small iteration and I'd have to go do that 100 again. And in that process, you do learn a lot about how indicators work, and more so how price responds to certain things, or understanding what the statistics and probabilities are puts the odds in your favor. So my manual trading win rate is actually higher than what a lot of the bots are, because I would re-enter momentum trades and sometimes leverage up. Now, this is all advanced techniques, but I want to show you towards the end of this video exactly how I did that and why I did it. But to get to that point, I want to show you how the Fibonacci is such an extremely important tool. It is actually one of my favorite tools in terms of not necessarily providing a standalone item, but it is because it provides a projection into the future for a price target or a price pullback area. So when you're on lower low watch or higher high watch or lower high watch, for instance, where the higher low comes in at matters. And I'll explain why on the charts. So knowing the Fibonacci numbers where it comes in at can help you determine the strength of that downward trend or that upward trend, for instance. Now, this is obviously in combination with all the other indicators and confluence that you'll have from the trading strategy. So this is an extra layer of confluence on top of what you've already got. So this video is definitely going to be more advanced. Okay, I've just pulled up the Bitcoin chart here, and we're on the daily. And this is a previous period back in time where the bear market had come down and it had pretty much been range playing for quite a while. But I want to use this because it's representing sort of the start of where the uptrend continued. My indicators that I was using to trade at the time, which is in confluence with the EMAs, I was buying from memory at around the 17 or 7,500 mark. That's where I actually bought in. So it is extremely powerful, but I want to showcase, one, how to use it correctly. And we'll go through all of those items in a sec. But if you want to pull it up on the chart, in the drawing pane on the left side here, there is this here, which is the Fibonacci retracement. If you click on this, yeah, the best part about using the bar replay is I can show you in real time sort of how it would help predict the future. So you would select here, you use it in the trend of the direction. So it's got a low here and it's got the high there. And then you can use your arrow keys if once you've set it up just to slide it across. So you'd be looking for a pullback here because we've just broken back above that key figure here. This was a key support level, which then turned into resistance. So that's a key level, but we blasted through it. So you've come up here and it's slowed down. At this stage, you'd be looking to see how far it pulls back. So these levels here have different probabilities of the price being hit. How the Fibonacci works is it's really good at a retracement tool. So it's good at helping you see how far it might pull back, or good for scalping opportunities. The indicator plots levels of the key Fibonacci ratios: the 23.6%, 32.8%, 50%, and 61.8%, which is known as the golden pocket, and the 76.4% against the price action. The Fibonacci also has extensions. So if it was to break out from that range, it'll give you extensions. The indicator plots levels of key Fibonacci extensions: 127.2, 161.8, 261.8, and so forth. So to show you on the chart, so to get the Fibonacci indicator, on the left-hand side here, there are the drawing tools. Select it, and in this case, we're just going to go from the low to the high. And as you can see there, it's plotted it. I've done that in the direction of the swing, i.e. from low to high. That way, when the retracement comes down, it gets to the 50% level, and then it gets to the 0.618 level. Just they're the key sort of indicators, and the 0.382. So I would expect this, if it was a really strong move in an uptrend, to probably only pull back to 3.82, but we'll look at that in a sec. So the Fibonacci numbers are the 1, 2, 3, 5, 8, 13, 21, 34, 55, 89. The way that it works is that you add the last two numbers together to create the next number. So 1 and 2 equals 3, and then it'd be 2 and 3 equals 5, and then 3 and 5 equals 8, and then it's 5 and 8 equals 13, and so forth. Understanding the value of the Fibonacci, in my experience, it's helping you understanding programming of the algorithms, which represent market confidence. General rules: if buying the 0.786 and 0.618, it's likely to sell at the 0.382 and 0.236. If selling the 0.236 and the 0.328, then it's likely to buy at the 0.618 and 7.86. So order of probability: 0.36, very low; 0.382 is low; 0.5 is moderate. So this means the market is a little bit indecisive at exactly this level. The 0.618 is very high and is classified as the golden pocket, and the 0.786 is low. I'll explain why I believe the 0.618 is classified as the golden pocket, and I think why it works so well psychology-wise for traders, because it's quite often where you would put your entry because you've got a tighter stop loss. But I'll explain that in a second on the charts. Interpretation for support and resistance. Fibonacci levels act as support and resistance, indicating potential areas of interest for trades. This is to do with in the future. It also, obviously, you can look back and do it as well. But it's best used when trading, trying to look forward, not backwards. That's how I use it. It helps identify the trends, and it also helps where there might be basically a bounce or a resistance level which you could trade to bounce to just create a scalp. And it also plots on the chart for you price projections if you wanted to know where to put TP levels. This does work quite well with altcoins. The advantages are that the Fibonacci indicator identifies key levels of support and resistance, predicts price movement, helps predict price movement and potential price targets, and confirms trends. How I use it and how I re-enter swing trades after TPs have been hit. I'll go all through that a bit later in the video. Let's just jump onto the chart again. So in this case here, I just want to use the brush. I'm not sure how far it pulled back because this is more than 12 months ago, but the price, if it pulls back down here to the 3.082 and then bounces, there'll be a profit taking. You could pull this another fib in here and it'd come back in just above halfway level at the 0.618. At that specific location, you could have your stop loss just above this high, and then you'd be looking for further downtrend. But knowing that you've just come back here to major levels, that would be, you'd want to be scalping that. Oh, personally, that is. But for the purpose of this, I'm trying to explain that if it only pulls back to the 3.82, that's indicating that this is a strong buy, meaning that the market isn't waiting for a big retracement back to the golden pocket. It's just getting on with it and moving on. So if it did pull back to the 618, then your target would be about here, looking for a short to go down, for instance. Let's just press play. And look at that. So now it's just shot straight through. So it didn't even make it back to the 0.382. So right now, if I was trading this is the daily chart, I'd be moving this up to here. I always push this out to the right a little. So now, if you were looking, if this has a little trend line going through here, but ultimately there's a support line that's just emerged in here. So just there's a support line. We can drop that off now. If price comes below this, it's likely to come back down to test this low, or it's going to come back down to the 0.618. That's quite common, especially in the altcoins. It'll come all the way back down, shake everyone out, and then do whatever it's going to do, and off it goes. So just be mindful that that can happen. Its path may not be as direct as that, but just always keep this as a good area for a bounce, because it's highly likely that it'll bounce and it'll come back up to here somewhere if it does reach this low. Let's just press play and watch what happens. Okay, so I was a bit slow there. Did move a bit quicker than what I probably needed it to. Got the drawing tool selected, that's why it's not picking it up. So that there now needs to go up to here. And there's your 0.618. And it looks quite violent. This, it could be a bit of a wick. We'll press play to see how it goes. Talk about a wick. It didn't muck around, did it? So what that was happening in the higher time frames is this was a higher high. So this is back into market structure. So that's a higher high there. And this is still technically a higher low. So because that printed that higher high than what it was here and here, and then when it pulled back, yes, it was lower than this local low, but it's still higher than this one down here. So it just so happened to come back all the way to the 0.618. And at this stage, there would have been a lot of people who were, in disbelief that it was just, or believing that it was just going to go lower because we've just been coming down for such a long time. So there was a lot of profit taking here for all the people who were shorting. Anyway, price has gone up to there. So now you could move this here to be like so. And we repeat the process. Okay, I just want to show you what I did on Bitcoin recently and how I use it with my manual trading. But I'll just go to my Bitcoin script. So this is the 2-hour chart, and I don't need any of that other stuff there. So this is currently automated, and it took profit here. So I re-entered this trade a couple of times. And the reason being, the Fibonacci tool, I had it selected from there down to the bottom here, from this support line here. And the price had pulled back to the slow moving EMAs, which if you look on the Fibonacci tool is above the 0.382. So it's a higher low, but it's a higher low in quite a bullish setup, as in at that exact same time, I think I entered here, and I did enter there. Just a second. I'm going to pull up the tool that I used. So I entered again right here, and I would have put my stop loss like here. When I re-entered this trade, and why I did it is because not only had price pulled back down, so it's still creating a higher low, it just so happened to hit the slow moving EMA, which is quite often a bounce area anyway. But in terms of the Fibonacci at the time, that was the top and this was the low. It's only pulled back to the 0.382, which is a bullish setup in itself. It just so happened that the stochastic indicator at the bottom here, which I'm not 100% sure. Let's just double check the settings. Oh, no, sorry. This stochastic indicator down here is on the chart time frame. So that's on the 2-hour chart. So the 2-hour chart was in the oversold territory. We'd also hit this here. And on the Fibonacci, we hadn't even retraced that down that far. So I was seeing this as just this whole area as basically putting in a higher low. And as you can see, it's quite a strong move and it just bounced off there. Now, this isn't a video about position management, but I doubled the size of my trade at that point, so that then I can take profit off, say 50% of it, at my own choosing when I think I can. Now, if you pull out and look at this, I'd see that because it's a lower probability. I see it as a lower risk trade. But if you pull out the fib to that local high there, and you pull this down here to that bottom, I need the fib around the other way. Sorry. Let me go from there to there. I need the fib to go from here to here. So this target on the uptrend, it's pushed. This was the 0.618. So we've zoomed right out from this high here all the way down to that low. So of course we were going to take profits around this area. I didn't, because the script had already taken a little bit off the table here. But it's okay because my strategy doesn't involve selling another TP. But I manually entered back when it retested the slow moving EMA. Like I said, I've just doubled the size of the position. The Fibonacci on the higher term time frame is, now that we've broken through this 0.618, we might very well come back and test it. That'll be the slow moving EMA or the fast moving EMA, depending on like when that happens. And then it very well could continue, and yeah, I wouldn't be surprised if it pushed up, because at this level here, just this whole level, just right through there are a lot of short positions that had leverage. So in all honesty, I would not be surprised, knowing that price continues through and they push it up there to liquidate all those shorts. All those shorts just basically close their positions because they're no longer viable. If they don't close them and it liquidates them, it'll shoot price up quickly, so we could quickly make a new all-time high. And that's when I'd sell like 50% of that position when that occurs, because I'll know basically what will happen is the price will be potentially all the way up here to the 1.272. I don't know this at the time of recording, by the way, but let's just assume it is. It could be there, or another good indication is that it's just extremely overextended from the EMAs, like distance-wise, like this one is here. It's just a long way from the EMAs, so a retracement back to the EMAs is very likely. The longer you trade with a certain system, the more you'll come to understanding when an extreme move is sort of happening in terms of distance from your EMAs. Like this is a prime example. This short position come down, take profit, and look how far it is retraced. There would have been people longing here and just taking profit back, basically below this breaking point. But then it actually kept going. Okay, so there's some quite advanced information there to unpack, but the Fibonacci tool helps put price targets when you're manually trading in. So it just helps you take profit off the table. And I think that with the swing trading that I predominantly do, even though I still love scalping because the equity curve's a lot nicer, especially once you've automated it. The power of knowing where a good price target is, it's very valuable. And I actually think it's more valuable in helping you know when to basically size up. Now, I could be completely wrong here, and that price could come back and retrace all the way back down to here, just wick me out and stop me out. But there'll only be two things that close this long. Either it hits the stop loss or those EMAs turn down. But the risk to reward on this trade is 2.18. There are other items that I use as well. So for further confluence on this one, for me, another big ticket item, if I just go back to Bitcoin and we go straight to the 5-day chart, another form of confluence that I'd have is the 5-day stochastic indicator. We'll just double check its settings because it may not be right. The 5-day stochastic indicator is quite powerful in itself, and it's only just crossed over here. So if that was in the oversold area, I would not have been sizing up on that particular trade. But I'm just putting you into my psychology that when you combine all these indicators together and you're using them all the time, you'll know when the market's overextended in either direction. Have probabilities and stats in your favor to know when that's happening. So, like for instance, the strategy tester on this particular item, it only has a win rate of 55%. But when you combine that with the manual trading strategies that I use, you can you can do better. You can increase your net profit in a nutshell. And the important thing to note here is that the max drawdown is not that high in comparison. 7% max drawdown compared to 103% net profit. That's a profit factor of 3.321. So to sum all this up, the Fibonacci tool is great at helping see how far of pullback may be to indicate the strength of the lower high or the higher low. Like, so in this case, if it pulls back and it pulls all the way back down, okay, so let's just flip this on its head for a second and just pretend that I'm wrong and how I would change with the market dynamics. If price was to reject here for whatever reason, a black swan event, and it comes down to the 3.82, for instance, so it comes all the way back here, this is still technically a higher low. But at that particular stage, I'm on lower high watch. So we may still be long, we may not, but it might just be a wick. But I'm just saying, when this comes back up at that stage, we're looking out for a lower high. So we go into lower high watch. And if we were to have a lower high watch, hypothetically, that would probably come back up to a resistance level, say there, and then it would come down. If that hit, if there was structure here where we had a lower high, and we would know that by potentially looking it in a bullish engulfing candle, or there might be some early warning sign, or the EMAs have crossed down, for instance, there might be, an indication that that's happening. As soon as that's happening, we're going to be looking for the lower low. And when we're looking for that lower low, it's where this comes in. So we would be using this here, and we would pull this up from the top to the bottom. Sorry. We'd grab the Fibonacci and we'd pull from the top to the bottom. And we would be looking, okay, that's pulled back there to the 6.18. It's jumped back up. It might continue on down. And where is that? So this is like a support level. Just need to move that lower low. So there is a support level here, like coming through here. So it is likely that it could get hit there. Then they've got these two down here. And your 1.27, you could have this retrace all the way back down. I don't think that would be likely due to other parameters, but I'm just saying that it comes down to your psychology a little bit on just picking up on where the next potential higher low or lower low would be forming, and knowing where that's forming on the Fibonacci can dramatically indicate how aggressive that next move will be. I know this is a little bit advanced and hard to digest if you're not doing it actively. To practice trading with the Fibonacci, you literally have to do it in a live trading environment. You can't back test this without having favorable results in your favor. It's difficult to do, and discretionary trading is exactly that. It's difficult. So having this in your back pocket as a tool to help provide extra confluence in something that you already know the statistics on is, in my opinion, where the value add comes in. One last thing, and with this little line that I've drawn here, I don't think this is going to play out, but I'm just trying to prove a point. If this was happening, the reason that lower high there would be an ideal setup would be because you would have your trade entry there. Obviously your lows down here, but your resistance level is right here. Sorry, your stop would go just slightly above the previous high. So if this did play out, that's what I'd be looking for in confluence with my actual trading system. So that's why that magic number of the 618 is so popular. It's because the distance between your entry point and where you would put your stop loss isn't that far, and you generally should have a ratio of like 1 to 3. This ratio is a risk to, sorry, when I say ratio, I mean risk to reward. So it's showing here that the risk to reward ratio is 3.28. Firstly, I want to say I'm a trader more than I am a YouTuber, okay? Trying to bring you educational content to help you. I post a lot of stuff on X. It's massively popular for the financial sector because of the news-driven information that you can receive from X is obviously a lot quicker than you get through, say, TV stations and so forth, or radio. So X is used for traders, basically because it can give you that news-based information and so forth. So yeah, I put a lot of alpha, a lot of stuff that I'm doing on here on X. And yeah, I do post a lot of my trades. They are swing trades. I'm predominantly a swing trader. I do scalp, but I'm predominantly a swing trader. So you'll be able to see a lot of the stuff that I post, and I do put up what I'm expecting from the market in the foreseeable future. Yeah, that's pretty much it. I do put heaps up here. I did even put up my P&L. I do put up these P&Ls of the positions that I'm in. And I apologize. I don't do that to put it in your face. I do that to make it so you understand what a legitimate trader will do. A good trader has to do this because you have no other way of verifying that you know what you're doing. There's a lot of people out there, and it really grinds my gears when they're trying to give traders help and information when they're not good at trading, or they're just, if they were good at trading, they would be putting this information on there. Like, it's not dollar figures, it's just percentages, okay? It's just proving that you're putting your money where your mouth is. And I also put up the P&Ls from time to time just to prove it. I had a pretty good month in November, so I put it up. I was up 41%, and these are trades, get in, get out. So yes, that's just me with the market flow, but obviously, year over year, I've done quite well. All this stuff, I also have back tested and stuff as well. So yeah, please, if you'd like to get more alpha on what I'm looking at and on what I'm doing in the market, hey, you don't necessarily have to take the trades I'm trading. I'm not asking anyone to do that at all. I'm just saying you will potentially learn stuff. I do put TA information on the chart for you. So again, it's Luke trades today. And I'm just doing this because I think that it's important that you can find traders online that will help you, and they're out there. They come with a lot of knowledge and experience and strategies, and they can definitely help. So, yeah, please follow along and yeah, stay tuned for more. Got a lot of videos planned.